So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Build It to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth in life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth in life so you can give more all the way to help MVPs. My name is Brett Swarts, and each and every episode we're joined by the world's top entrepreneurs, millionaires, or billionaires, and they share their secrets, insights, and wisdom with us so we can all compound and make a bigger impact. We're also streaming on Capital Gains Tax Solutions podcast on YouTube channels as well for our listeners out there. Hey, I'm excited about our next guest. He's out of Southern Florida in the Boca Raton area, and he is on a mission to help you optimize your accounting and financial functions to help you manage your business, maximize profits, and lower your taxes. He's a CPA by trade, and he's one of the founders of Osher CPAs, and he is going to be talking to us a little bit about how to optimize our finances with CFO Services. Please welcome to the show with me, Mr. Alex Lopez. Alex, how are we doing?
Great. Thanks for having me, Brett. I'm happy to be here.
Absolutely. For our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
Absolutely. Where to begin? I started my career in real estate about 20 years ago, at the very peak of the previous boom, if you can believe it. I was effectively straight out of high school, and young and ambitious, saw an opportunity and got very excited about real estate. And I got a little bit of a taste of money at an early age. And I thought that was going to be it, right? And it wasn't long until the world came crumbling down and the '08 crisis just kind of destroyed everything. I would like to say the '08 crisis, but here in Florida, the crisis began earlier than that, particularly for those in the real estate business. And that is effectively the love of my life. Real estate is something that I've carried with me all along since I was a kid, effectively. And it is still my specialty today in accounting and CFO services and tax strategy. And the way it played out was, once the crisis hit and everybody lost their shirts and the world came crumbling down, I sort of stumbled into the accounting world. As I was working on my business degree, I always wanted that, right? I've been a business-minded person my whole life, and an entrepreneurially and business-minded person. And I wanted a business degree. I didn't know that I wanted to be in accounting, but they make you take accounting courses for any business degree. And I found I had a knack for it. And one thing led to the other. It was also a bright spot in the economy at that time. Circa 2010. When I was getting deep into my major there. All of Wall Street was laying off left and right. You could be an Ivy League MBA, and you're likely not doing the best at that time. And I decided to double down on my schooling and major in accounting. And during that time, I also got an opportunity to get into commercial real estate with a dear friend and associate of mine who landed that opportunity and brought me along. And I was at an interesting time when the market was starting to come back. And things started looking up, and I was getting pretty involved and learning a lot about the business. But then came graduation time. I was doing that while I was in college. All right, so probably working 50, 60 hour weeks and studying in between. And I had to decide, because the big firms in big accounting and consulting, they only want you straight out of college. If you take some time to play around and then figure that you want to be in that world, it's a little late, right? So I had to decide whether I wanted to stick it out in the real estate business, where I had previously been deeply scarred and where you're subject to some pretty vicious cycles of boom and bust, or whether I was going to try this new thing out that I found I had a knack for. And I picked big accounting. I went into one of the global firms, but the first thing I did was tell them that I'm a real estate guy at heart and that I wanted to be on the real estate clients. And they did that for me. They put me in a couple of REITs and developer accounts and investment firms focused on real estate. Just kind of kept the whole real estate thing going from there. And it was a very rich learning experience. I spent about 4 years at that firm.
Excellent.
Yeah,
That's
worked.
great. Well, let's dive right into all that being in hand. And by the way, if you want to learn more about Mr. Alex Lopez, you can go to oshercpas.com. It's OSHER CPAs.com, oshercpas.com. So the topic at hand, which is optimizing your finances with CFO services. So, Alex, what's the number one secret for business owners or real estate owners listening right now to optimize their finances with CFO services?
It starts with the basics. Having a good foundational understanding of what is accounting, what is finance, what is taxes, and how these are functions that in the world of small businesses the lines are blurred, and it's typically either a bookkeeper or a traditional accountant just kind of doing it all. Whereas the world that I come from, with private equity backed companies, publicly traded companies, they're a lot more structured, and these are different functions that have very different goals and priorities. And having a keen understanding for what is effectively record keeping and accounting for history, right? Versus having a true understanding of the story that the numbers are telling you, and being able to use that information to not only see but direct your future is key. And that's where the CFO comes in. A CFO is somebody who owns accounting, taxes, finance, among other things, and is able to orchestrate a show where you can manage a business according to the numbers and truly direct your future.
Wow, that was really, I think, succinct and powerful. CFO services is really not only knowing the history, but also knowing the current and knowing what the story is telling of the numbers, and to be able to take action and be strategic about it with tax, with financing, with accounting. That's really well said. That's the number one secret. Okay, so what's the number two secret to making sure that you're optimizing your finances with the CFO services?
KPIs. That's a big one that a lot of, particularly small, medium-sized business owners, don't use as they should. In some cases, they don't even know what it is, to be honest. But the basics of it is that I am a hardcore believer that the majority of the tools and the techniques used by big companies are available to small business owners and medium-sized business owners. They're just not used to these concepts, and so they haven't incorporated them into their everyday management. But things such as having a clearly defined it could be as little as 1 or 2 metrics that you live and breathe and that you constantly track. You clearly define them and you constantly track them. That puts you way ahead of the competition, and it allows you to effectively operate as one of the big boys.
Okay, that's awesome. That makes sense. So number two is, having KPIs and even just a couple metrics that you're clearly defining, you're clearly tracking, and excellent. I love it. Let's keep going with the momentum. What's the number three secret to really maximizing and optimizing your finances with the CFO services?
Okay, here's one more foundational belief of mine. Every business owner, or the majority of them, are their own CEOs. They're their own COOs until they get to a certain level where it just makes sense to bring somebody in to either take on that role or significantly help carry the load. But it's pretty rare that these people are also wearing the hat of a CFO to the extent that they should and perhaps could, but they're not trained to think that way. They're a lot more worried about operations and other key areas of the business, all the while effectively neglecting the role of a CFO because it's not inherent in what a business owner does. And that's where it becomes so important to start thinking about how, well, perhaps the neighbor's daughter who handles the books is not the best person to fill that role, right? And it's just a very common theme that it's unfortunate that it's a job that goes undone until it's usually too late. Maybe after the year is over, somebody has some afterthoughts about that, but it's one of those things that should be part of the plan all along. It should be part of the organizational structure, even if it's just the owner actually performing the key duties of a CFO. It should be a clearly defined workflow where where an owner or somebody else in the team with the expertise or at least some level of skills to carry the task is analyzing financials, projecting, and planning based on the figures.
I couldn't agree with you more. By the way, to learn more about Alex Lopez, you can go to offshorecpas.com, offshorecpas.com. He's in the Boca Raton area in Florida. And yeah, I'm doing some basic things that are really key, right? I mean, obviously, what are your financials for the last 12 months? What are they the last quarter? What are they the last month, right? Do you have up-to-date books? And then do you have a variance report? It's one thing to be like you said, the history of it, like this is what's happened. But then do you have a budget? And then how did you perform the budget? And what was the variance, right? And month over month, and then the previous year, and understanding rhythms and trends and nuances, and be able to read that financial report to say, oh, something's wrong here because last year at the same time we were, let's say, $100,000 more in revenue. Like what's broken here? Or our revenue's up, but our expenses are now, 50,000 higher. What's going on here? And so talk about the importance of a variance report and a model P&L and being able to make sure that you're accurately, understanding even what, you're reading, in a dynamic way versus just like a static historical books and records.
Absolutely. The moral of the story with that one is that the answers to your biggest questions will usually jump at you when you simply take the time to perform these tasks. And these are things that don't come naturally to most people. I also find that a lot of not just entrepreneurs, people in general, they're a little I wouldn't say necessarily scared, but they just don't enjoy working with numbers so much, right? So they tend to push this type of thing off. And usually the answer to their questions and the solutions to their problems are sitting right there. You perform an analysis of your actual performance versus your budget, your plan, and you identify a big variance that will quickly tell the story about what went wrong or how you hit it out of the park this month, this quarter, and what you could do to mitigate or further leverage what the root cause was. So it's just one of those things that you can't stress enough the importance of it. If
Can we
you're
get,
serious about scaling, that's the key. If you're serious about scaling, that this is one of those things that need to be formalized and carried out
Makes
systematically.
perfect sense. Do you have an example that kind of comes to mind, or what is the most common one that you see? Is like, okay, they finally did the proper budgeting and forecasting and their numbers, and they finally properly hired someone like yourself, a CFO services, to break it down. Is there like a couple like top two? You're like, oh, this is like tends to always come up, and then they can make or is it pretty dynamic and there's not a lot of patterns there, or do you see major patterns within real estate or property management or different companies? Anything that kind of sticks out?
Yeah, absolutely. So one of the main patterns that we see happen a lot is where people just sort of take their cash as profit and they have no clue what is really theirs to keep and what isn't. So they'll end up being under the impression that they cleared seven figures, but in reality, they have prepayments from customers for projects that are oftentimes not completed, and they have double-digit tax bills that they didn't account for, and they don't have a good grasp on the timing differences between when money comes in and when it's supposed to be shelled out for the related costs. So they end up in trouble, particularly around taxes and debt, right? When they draw on credit lines, or when they lean on their terms with their vendors to carry out their work, and they end up with a windfall in cash that is not theirs to keep. And how you mitigate that is just knowing what your margins are, having not just planning around your profits, but around cash flows, because cash does not necessarily mean profit or cost for that matter. Sometimes you're outlaying lots of cash, but it's for investments that are coming back at you. Other times you're collecting tons of cash that is not yours to keep. And keeping those straight is not hard when you're doing six figures, but once you get into the deep sevens and eights, is where we're seeing a major trend that these founders are realizing that these things need formality. And where they might not have run to hire a $350,000 a year CFO before, they're now going to their financial professionals and looking for something along the lines of a fractional CFO that can guide them in these matters.
Perfect. Oh, wow, that was so well said. And great example. So let's break that down. Like, so someone says, hey, I like to work with Alex, right? I need a fractional CFO. What does it look like working with you and your team to build that out?
So it starts with having the right raw materials, as I like to say. Uh, Company has to have good record keeping, good bookkeeping, and accounting, because that's what you build on, right? So let's say for a second, because that part is figured out. The main thing is getting a good understanding of the economics of the business, its margins, its plans, its history, and developing a plan, at least for a year, by month and by quarter, of where you're headed. Having clearly defined metrics, capital raising goals, profitability goals, potential exit strategies, and getting a really good understanding of what it's going to take to get there financially, and you manage to that. That's the part that most businesses in the seven to eight figures in the low eight figures are typically missing, because usually you get to that point with an original team whose skills the business has now outgrown. But starting with behaving like you're a big company, right? Thinking like a big company, and filling that role of the CFO and the financial strategist be it by acquiring the skills or by hiring a firm or an in-house employee that can carry out the duties, pays out massive dividends.
Okay, this is great. Okay, so they say, Alex, I want to work with you, right? And what does it look like to work? You're a fractional CFO in your services. What's the general engagement? What's the general process? And it's somebody works with you. I'm just kind of curious what that looks like.
The typical process is it's a friendly conversation, talking about where the company is, where it has been, what it's currently doing, and where it wants to go. And based on that, there's typically some heavy lifting at the beginning. So just as an example, I got off a call a little while ago. A very impressive entrepreneur, 34 years old. He's deep in the seven figures now, and he's already thinking of an exit strategy and retiring in the next couple of years. And guess what? It's very doable. He's well on track to do that. And he came to us knowing that he needed this, having a really good idea of what his exit number is, which by the way, he's pretty close to be able to hit that. He knows where he wants to be. He at least has a good understanding of what his KPIs are, and he knows that this is not a job that he can fill himself. So what did that one involve? It involved a little bit of heavy lifting at the beginning to get him a foundation to manage to. That's usually a project of a few weeks, a couple of months, depending on what you have going on. And then from there on, it becomes a matter of checkpoints. Checkpoints every 2 weeks, every month, depending on the situation, to interpret and analyze and update the plan.
I love it. Interpret, analyze, update the plan. Everyone, Alex Lopez has been phenomenal so far, by the way. OshlerCPAs.com, OshlerCPAs.com. He includes accounting services, strategic tax services, business consulting, financial management. As a fractional CFO is what we've been focusing on today. And controller and CFO service covering every aspect of accounting and finance. And you can learn more about him by going to OshlerCPAs.com, OshlerCPAs.com. Speaking of exit planning, Alex, I'm glad you brought it up, right? People who exit have massive capital gains taxes. Someone comes to you and says, hey, Alex, I'm exiting my business, my Bitcoin, my real estate, right? My luxury house in Boca that I've owned for 25 years on the beach, and it's worth $15 million, and it used to be worth $1 million, and I just can't stomach the tax, right? So I'm curious, what's your biggest frustration when it comes to the 1031 exchange and lack of options for businesses, Bitcoin, or primary homes?
1031 exchange particularly, that is not a forever strategy, right? Eventually, you will have to pay the tax bill if you do exit and don't enter into another 1031 exchange. But
unless you die, of course, right? Then you get a stepped-up basis, right? But
exactly, but 9 out of 10 times. So,
but by the way, I like how you say that though, because I feel like the forever strategies are the ones that unlock what's called truly passive income. It's that fourth quadrant, that Robert Kiyosaki book. It's what that entrepreneur just, he wants to probably be, at one point be done and be able to be free up all of his time and his energy. And the challenge of the 1031 is it typically keeps you in the toilets, the trash, the termites, the tenants. All of your time is still pulled into that property or properties, right? Or that next property, that new set of problems, right? And so you go, and then the other side, you can do some partial Delaware 1031s that are passive, but the problem with those are the returns are around 5% usually. They're not overly attractive on the cash flow, which you need both. You need your time back and you need massive cash flow, typically 2 to 3x your cash flow from where you're at to unlock your truly passive income number. So I digress, but I wanted you to keep going. What other frustrations do you have with the 1031?
I mean, the biggest thing is also, people just trying to tackle these things after the fact. Like, I can't tell you how many times I get the phone call after they already papered everything up, after they already closed. I had one just about 2 weeks ago. This guy did an 8-figure exit of a business. And, I think it was late November. It's funny. It's actually through a colleague. A colleague's client did this, and he needed our help. And then they went and they rushed off to buy it's about 17 single family properties all over the place to try to cost segregate everything. And they thought that they were gonna need a passive loss, but it turned out I actually needed an active. It was a disaster. So my biggest frustration really is with people not knowing their options and pulling the trigger too early, and then in some instances, unfortunately, our hands being tied as to getting them the best solution. And it's too common. It's,
By the way, we call this the shotgun wedding, right? You get engaged in 45 days, you get married in 180 on the 1031, or just the opposite. You do the lazy 1031, which is the cost seg method, right? You end up buying 17 single family homes in these random locations with new property management, and you're letting the tax tail wag like this big exit, right? And the freedom dog, right? You wanted the freedom, but now you're stuck with 17 new problems. Like that sounds like a disaster to me. And so, by the way, we have a better way, Alex. I'm going to present it to you right now. And maybe you've heard it, maybe you haven't, but walk through it, right? And so real quick, I started at Marcus and Millichap, and we learned the hard way of why the 1031 was not always our friend during the 2008 crash. I was in Taxifornia, and I was in the state
I like that
capital.
one.
State capital, and we saw friends, family, and clients lose half or all of their wealth, partly because they didn't have a debt flow, tax flow, and cash flow mindset. In other words, they were stuck in just cash flow, and they got stuck with capital gains tax that were massive, and either they didn't exit in time and the values dropped, or they exited and tried to 1031 and ended up overpaying before the market and put themselves in a poor position. So people lost. I had a client named Steve lose $50 million worth of apartment complexes, lost his house, divorce, primary, bankruptcy, lost. It was really a disaster. And you're like, could he have saved that? Yeah, we found out a way how to do it where you can exit and not have to use a 1031 ever again. Works for businesses, Bitcoin, real estate. And we use an installment method with the trust. So we use 453 installment sale reporting with the trust. As a third-party trustee is what we do. And we build this where the asset is sold first to the trust and the trust sells it to the buyer. And we do it like a simultaneous close, and the trust issues a promissory note to the seller, typically 100% carryback. And they're in a deferral until and if they take payment, which is they will, right? So for example, we just did a $3.2 million plus CPA company exit just a month ago, okay? And so it was his business he built. He sold and he deferred all the tax into the trust. He didn't give any cash. He didn't finance the buyer, right? He financed the trust. That's different, right? And the money hits Charles Schwab, but now this is the cool part. It can invest into whatever he wants. Back into other real estate deals if he wants to do real estate on his own or passively. Stock market, because we don't have to do any like-kind replacement requirement. If you want to do some Bitcoin, he can do some Bitcoin. A mixture. And you can truly diversify, get liquidity, and there's no 45-day 180 requirement. There's a third-party trustee, that's our role. But collectively with the tax attorney who created this, he's also a CPA. He used to work for Arthur Anderson. He always says before the Enron days. Over 1,000 plus transactions, billions of assets sold using this, been through about 30 no-change audits. But most people, even the most experienced CPAs, real estate professionals, they don't know about it, or they don't know how to do it. They get it confused with the Delaware Statutory Trust, which is another 1031, and they just don't know. They don't know what's even available. So I'm curious, have you heard of a strategy like that before? And then what would it mean for clients that are exiting businesses? We just had another $70 million business exit in the Northeast for a tech business sale, and another $40 million plus exit on the West Coast for another business sale. I'm curious, what would it mean for clients if they had a strategy like that?
So I have heard of it and I've read up on it. I haven't used it myself, but it does sound like a powerful strategy that could seriously mitigate taxes in most, if not all, cases. And the reason why a lot of people who could benefit from these may not have heard or even used them is because there is a tendency among technically my colleagues, right, or other CPA firms, most of whom are very check the box focused, right, with compliance. They're just deathly afraid of anything that is innovative, so to speak, and they prefer to stick to just the plain vanilla things that have been around forever. So they're just not familiar, or they're scared of this type of thing, and that limits people's access to these powerful strategies because they're not getting it from their advisor. So they need the likes of us to educate them about these topics.
Exactly. If you want to learn more about this, go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com. We also wrote a book on this whole subject called Building a Capital Gains Tax Exit Plan. And we call it the proven playbook for unlocking any asset of any kind for yourself or for your clients. And so if you're a CPA like Alex, or a financial advisor, or a business broker, or a real estate agent, luxury real estate agent, anyone who's helping people with Bitcoin exits, it works for all assets of any kind. We're the first to do it with Bitcoin. We've done it for primary homes, businesses, real estate. We can save a failed 1031 exchange, but you got to get started and you got to meet with us before you exit. Because if you exit, like Alex said earlier, it's too late. So go to capitalgainstaxsolutions.com to get started. No cost consultation. You just have to have a deal that's $1 million net worth or better to qualify for the application for the call. And then we'll walk you through your options. And by the way, sometimes a 1031 is your best option, and we'll tell you that. And sometimes a cost seg is your best option, and we'll tell you that too. But what we found is most people want truly passive income, and our strategy delivers that in a very powerful way. Again, capitalgainstaxsolutions.com. All right, Alex, we're running out of time. You ready for the lightning round?
Let's do it.
All right, knowing what you know now, if you go to back to your 20-year-old self, what's the one golden nugget you make sure to tell yourself to do?
I would triple down on real estate. And so I've sold some properties that I should never have, right? So that would be the first thing that I would do. I would make it a point to never ever sell property, which, by the way, I am now committed to.
I love it. I love it. Yeah.
It would be nice back then.
Yeah, if you never sell the boardwalk and the Park Place and all the places around the board, and you only cash out refi up to 50% LTV to keep safe, you really can't lose. It just can take a long time, right? Depending on your ability to acquire those. But I'm with you on that, especially if you had bought 20 plus years ago. Next question: what are you most curious about right now?
What am I most curious about? AI, I would say AI. I am not a naysayer. I'm a big believer in AI. I am also a hardcore believer that it is not an adequate replacement for the majority of the worthwhile causes, right? So, for example, I do not believe that it will be a replacement for lawyers, for financial experts, for entrepreneurs, for a lot of the creative types. It's just not a replacement. But I am very curious where it's going to be, particularly in my field, in the next 5-10 years. Right now, it still makes a lot of mistakes, a lot, deadly ones. So I'm not very optimistic about the next 5, but I am very curious about 10 years from now where it's going to be.
Well said. Well said. Next question: what's your number one leadership quote or theme that you strive to live by?
Number one leadership. Oh man, that's a good one. Leadership team quote.
It could be a theme or quote, just something that comes to mind. It could be a core value you have for your company. It could, really anything.
It would be to work on the business, not in the business.
There you go. I like it. That goes along perfectly with the episode. Next question. Is there a particular AI tool that you're using more that is very helpful for you today? What's your go-to?
ChatGPT.
Yeah. And then really the last question will kind of sum up the entire show, right? Which is, we really want to encourage everyone to practice a stewardship mindset over ownership, right? And the stewardship mindset is, hey, everything I've been given it's a gift. It's a gift from God, right? He's given us to be a blessing and help to more people and bless others, right? And so it's mine to steward that and bless, right? So how do you best practice that mindset, a stewardship mindset?
I'm going to paraphrase Russell Brunson, who paraphrased somebody else, okay? And it's along the lines of, if you truly believe in your heart that what you do is helpful and valuable to others, then you have a moral obligation to do it for them. You have a moral obligation to deliver your services and to share with the world your knowledge. And I live by that.
Absolutely amazing. I love Russell Brunson, and I love that you said that. Yeah, right? If you truly believe that what you do will transform and you're called to do it, and you have a moral obligation to deliver your services, to share your services, to go out and share it with the world. Absolutely. Alex Lopez, this has been amazing. I want to thank you for being on the show, sharing your services, sharing your expertise, breaking it down, the importance of gaining momentum within finances, within a business, with Fractional CFO Services and what that looks like. Your expertise is so needed in this world with the helping others to steward their wealth well, helping their businesses to grow, all of the things. For our listeners who want to get in touch with you, one last time, what's the best place for them to find you?
You can find me at alexlopezcpa.com. That's the most direct way.
Okay, perfect. Thanks, Alex. And also want to thank all of our listeners for listening and or viewing our YouTube channel and podcast for Build It to Billions and Capital Gains Tax Solutions. We're on this journey with you to scale from millions to billions so we can get more all the way to help MVPs, the most vulnerable people. My name is Brett Swarts, and I want to encourage you to take action today and really look at hiring Alex to help you to run and be a fractional CFO for your company. And for those, of course, who are exiting a business, Bitcoin real estate, you have massive capital gains taxes of $1 million plus exit. I want you to go to capitalgainstaxsolutions.com to book a time so we can walk through your options on exiting. Also, talk with Alex. Maybe we can brainstorm and figure out what are your best options. Sometimes it's 1 or 2 or 3 different strategies, not necessarily just one, but we do have an amazing strategy we want to tell you all about by going to capitalgainstaxsolutions.com or pick up the book, Building a Capital Gains Tax Exit Plan. Appreciate you listening or watching out there, everybody, and we'll talk to you again real soon. Bye now.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.